So I think we're about to start, everybody. First of all, welcome to that channel. Welcome to Crypto Bay. My name's Hugh Riley. I think this is probably the best crowd we've ever had, and the best ratio we've ever had. Tonight we're gonna learn about blockchain, and Elena is going to deliver it. The CryptoChicks are here. They got the T-shirts, and it's gonna be fun. We have high-quality snacks over here. Come and help yourself. And Dennis is over there, who usually does the Crypto Bay with us on Tuesday nights. And you're welcome to come back any Tuesday. And we're hoping to do some more work with the CryptoChicks. I guess you all know that Bitcoin's been falling down all day, but it's coming back up now. I think it's hit bottom, so it's a good buying opportunity. Not that I'm giving out any advice, because I could be totally wrong. It could go to zero. But we're going to find out tonight, I guess, what blockchain is really all about. And I'm really looking forward to this, especially with all these new things like hash graph and IOTA and these new variations on distributed ledgers that are coming out. So we're looking to hear about all this tonight. And then afterwards, we're going to have an opportunity to ask some questions. And then we can just hang out and get to know each other a little bit. And so please, and next week we've got somebody from Dennis, CoinSquare is going to be here. And CoinSquare, again, is, what is it? It's a big exchange? A coin exchange in Canada. So if you want to come next Tuesday, we're going to be speaking with Wojtek Gidzinski from CoinSquare and find out all about that. And we're going to continue to bring you good information every Tuesday night. And if you can't make it live, of course, we're live on the website, thatchannel.com. So I'm just going to turn it over to Elena now. Oh, yeah, you got your, I know when you came in, we gave you that channel. We call them paper coins. And that's just a good way to, because it's a cryptocurrency, so you can save them up. I know you may not have the wallet on your phone yet, but save them up. And then when you do get the wallet, we'll convert them into real digital cryptocurrencies. So Elena, thanks for coming here tonight, and take it away.
Thank you, Hugh. Welcome, everybody. Tonight is the night when you learn about a blockchain, if you don't know about it. And if you know about it, you learn even more. Because there's, I can assure you, there's nobody in the world who knows everything. I don't know everything, and nobody knows everything. That's why when you ask me questions, I will try my best to answer. But if I cannot answer, I ask you to forgive me, but I have a source to find the answer for you. So we're going to start right away. Blockchain. What is a blockchain? It is a database, as simple as that. But nowadays, it does not look like a paper files anymore. The database is something that we hold on the computer. For example, your pictures, it's a database on the computer. But as opposed to pictures, a blockchain is a decentralized database. What does that mean? It means that the pictures are not only on one computer, but on thousands and thousands of them spread all over the world. So this database is located on the computers spread out all over the world. Same database, same data on every computer. That's what decentralized means. And who owns these computers? And you might think that it's the smart guys like that. Actually, yes, but not only can be these guys and the kids and the grandmothers, and I own the one. And if you own this computer, and we call it a node, you are the owner of the blockchain database. All you need to do for that is just download one little program. All blockchains are different. And here I just put just one example, which program to download. And when you open it up, it will look like this. Very nerdy. Lots of letters and numbers that are running. And what it's doing is just downloading a database on your computer, on your node. And after it's done, this is how it will look like on your computer, in your files. So now, congratulations, you are the owner of the blockchain database. You can go inside these files. You have the rights. You have go and look inside. You can even change. Oh, in fact, you can't, and we will talk about it later. And remember, all these computers all over the world, they all connected between each other. Any guesses what they connected with? Good guess. They all connected by internet. You're surprised, aren't you? All right, and we talk a lot about regulations and what if a blockchain will be prohibited, or something like that. And let's say that I am the president of the country, and I know this day is coming. I will be one day. So let's say that I rule my people. Well, you cannot use your blockchain anymore. That's it. And let's say they all obey. They just turn off their computers. They don't use their blockchains anymore. So what's going to happen to blockchain? Oh, did you notice the difference? Bam, bam. Well, what's going to happen? Nothing. Blockchain is going to leave. And let's go even further and see how we can destroy blockchain completely. Any ideas how can we? Imagine all these computers connected by internet. Of course, we need the power, right? Because that's how they're running. And we need an internet. How can we destroy all the power and all the internet in the world?
Electromagnetic pulse.
Yeah, something like that. But if, yeah, in this case, of course, we have a bigger problem. Thank you very much. But in this case, even if one computer survives, blockchain will still be around. Anyways, this is just to give you the scale of the power of what we have when we have this amazing technology. Remember those files that we looked at? Do you know what's inside them? Inside of them, in a nutshell, just a ledger of transactions. And this is transactions of transferring cryptocurrency from one account to another. And just getting into cryptocurrency a little bit, what is a cryptocurrency? We know all this, and Bitcoin, and Dash, and Ethereum, and lots of them right now. What is it? Well, it is a digital asset. And in a nutshell, it's a money that is protected by cryptography, and records of it are stored in a blockchain. That's what cryptocurrency is. Now, the first blockchain was designed as a payment system. So we're going to look differences and similarities of the blockchain and a bank database. We all deal with the banks on a daily basis, so we know how they work. And let's say Alice and Bob. Alice has $100 on her account, on a bank account, and she writes a check to Bob. So what's happening? A payment system checks with a bank, and if Alice has $100, and she does, the transactions got recorded, and the money got transferred from Alice's account to Bob's account. If Alice tries to double spend this money and write $100 check to, let's say, Barry, payment system will check against a bank database, and her payment gets declined. That's how bank protects us from the double spending. So we cannot just write $100, one person, another one, if we have just only $100 on the account. Blockchain has the same records. So blockchain also contains records of the transaction. If Alice spent, let's say, 100 Bitcoins, very rich Alice, spent 100 Bitcoins and give it to Bob, this transaction will be recorded in a blockchain database. And Alice cannot double spend this money anymore because the record will be there. But as opposed to bank database, blockchain has an advantages. Don't get me wrong, it has disadvantages too. But it has a very powerful advantages, and we're going to go over it. So first, if we look at the central database cons, first of all, the biggest problem central database has that it represents a single point of failure. What does that mean? It means database located in one space. It means somebody, let's say a government, comes in and takes the license from this bank. That's it. You don't have access to your money. And I know this scenario is very unlikely for Canada, but I lived in another country, let's say in Russia, and we went twice through this event. So twice we lost all our money in the bank because the license was taken out of the bank. That's it. All right. So that's the biggest con of the central database. Another one, exposed identities. When you register with the bank, you have to provide all your information, addresses, names, mother maiden name, everything, for tax purposes, for good. In a blockchain, you don't have this. And the second one, or the third one, is attack vulnerability. If you even think about it as a malicious changes, I worked in the Edmonton police for 15 years. And even though our database was securely protected, there was people, including me, who has full access to the database. And same is with the bank. If I wanted to, I could make changes. And we know throughout the history that even in a bank, even if it's secure, there is always, not always, sometimes there is an insider who makes some malicious changes and steals money here and there. So all these cons are resolved in the blockchain, actually. The first one is very easy. Single point of failure. Blockchain does not have single point of failure because we have thousands and thousands of computers that spread out all over the world that belong to just people like you. And if any single one of them goes down, nothing happens to blockchain. Second, exposed identities in a blockchain. And that's, I take an example as a Bitcoin, as the first one. And here in this presentation, I feature Bitcoin a lot because that was the first blockchain ever. In a blockchain, you don't need to provide your name or email or anything, any information like that. You will be given, so once you register, you will be given just an account number, your address that looks like this, your address, and your private key, which you need to protect very dearly. And there is the cryptocurrency is not, safety is a little bit of part of this discussion. And if you know just a little bit about it, you know that private key is an indicator that you own your money. If you own your private key, you own your money. If you don't own your private key, you don't. There are, for example, some systems and exchanges where you buy Bitcoin or other cryptocurrency. Let's say Coinbase, right? And Coinbase, you have your account there. Do you have your private key there? No. Who this money belongs to once you bought it, once you bought your cryptocurrency and store it on a Coinbase? This money belongs to the Coinbase, not to you. If Coinbase goes down, because this is a business, right? Businesses can go down. There goes your money. So be aware, if you hold your cryptocurrency, make sure that you have your private key and you only one who has it, and store it somewhere very, very, very safe. This was just a stepping out of the discussion. But coming back, no identities are exposed. But at the same time, blockchain does not provide that much privacy. If somebody knows your account number, they can easily look up how much money you have on this account. So that's why you give your account number only in the cases when you really need to. All right, so the third one, attack vulnerability. And this is the most interesting one. Blockchain technology, from its birth, it was never hacked. Never, ever. We always hear about hacking and exchanges and this and that, but the technology itself, blockchain itself, was never hacked. And I will explain you why. So it has multiple levels of protections. So first level of protection, and remember that blockchain is just a list of the transactions. Alice transfers to Bob 100 bitcoins, and so on and so forth. All right? Each transaction is signed with this private key that we talked about. It means that nobody can spend your money for you. Nobody can make any record for you in the database unless they have your private key. If they have private key, they have full access to your account, they can sign a transaction with this private key. They can spend your money. If they don't, no way they can fake this transaction, because transaction is signed cryptographically with this private key. This is level 1 protection. And level 2. And that's where miner comes into play. And usually in this presentation I have, the pickaxe and I'm telling about the mining, but I decided this time I will have just this picture. Transactions in a blockchain are not stored as a list like you see it here. They are stored in the block. And block is protected and written in stone. And it looks like this. And the miner is the one who is making a block. How does this work? So every few minutes, that's for Bitcoin, for other blockchain it's different, transaction gets combined into a block by a miner. In a network, there are lots of them, lots of miners. Who are the miners? The miners are the program. Well, of course, people own the computers which these programs are running at. But in a nutshell, a miner is a program that is running and tries to solve a puzzle. And a miner has to make a significant investment just for a chance to get rewarded. Because in order for building a block, miner gets a reward. And this reward is substantial. For example, for Bitcoin, it's 12.5 Bitcoins plus all the transaction fees. You can do your math in head, so that's how much one block costs. And it's a lot of money for the miner, and miners work like crazy to get this money. And they making huge investments in equipment in order to do that. Why do they do it and how it works? We're going to look at after we take a little cryptography course. Cryptographic hash. What is that? So here I took my name and I applied a very simple algorithm to it, a cryptographic algorithm called inversion. Do you see what it did to my name? Very simple. And as a result, I got a hash of my name. Aneli, it's a hash of my name. Cryptographic hash. In blockchain, in Bitcoin, for example, the transactions in the block can also are also encoded using SHA-256, which is a simple hashing algorithm, secure hashing algorithm 256. And the resulting hash looks like a seemingly random string of letters and numbers. They are the same length all the time. They cannot be encoded back into transactions. only one way. And they are unique representation of all the information that recorded in the block. Anything you change in this blue box here, any transaction you change, the hash is going to change. Any questions so far? Oh, yes, about the hash.
Well, it was more, you were saying, do you have some coins on the exchange? The exchange actually owns the coin?
Yes?
Just like if you have money in the bank owns your money. If you have money in the stock market, the stock holder owns your money.
That's correct.
That's what you're used to. That's the first house of the actual internal possessions.
All right, so going after that. So what miner does? This hashing algorithm is very simple. And once you apply it, it's like a matter of just a couple of milliseconds. But miner solves the riddle, and this riddle is connected to blockchain difficulty. So remember, there are many, many miners in the network, and they all want to build a block. So here comes into play the blockchain difficulty rule. And blockchain difficulty rule states that the hash, resulting hash of the block, has to start with a certain number of zeros. In Bitcoin right now, it's 18 zeros. So what miner does, miner needs to add to this information in the block some number. Let's say we even start with 0. So the resulting hash would have these 18 zeros in front. So if a miner basically playing a guessing game. So if the 0, then resulting hash has, look, 3 zeros in front. So yes, we're getting closer. Let's take 1. 6 zeros, we're getting even closer. Now let's take number 2. Oops, no zeros. Further, like let's take number 123. Okay, 3 zeros. And so on. 4, no zeros. 5, 4 zeros. And miner solves this, try to guess the number until they have 18 zeros. So once this riddle is solved, blockchain difficulty rules are satisfied, the block is built. That's it, the miner's job is done. Miner now gets the reward. Actually, the information about this block get broadcasted to the whole network, to all these computers that are the nodes all over the world, and after that, miner gets the reward. This is how it works. That's why miners have to invest in a lot of equipment in order to solve this puzzle, because they are playing guessing game, and whoever has the bigger computer with a bigger power, they can loop through many combinations faster. They have a better chance to win. So that's why miners are investing into equipment. This is only one algorithm of the mining, and we're going to talk about other ones. But this is providing a security for the blockchain, because the resulting blockchain looks like this. This is a ledger that looks like a chain. And why does it look like a chain? I come closer here. You see the block? I can't come closer. So the block that miner builds contains, it's not only the transactions are that in the block. It also has this nonce that in a green that miner has to guess. And this block also contains a previous block hash. So whatever hash is built on the block number 1 will be recorded in the block number 2, and so on and so forth. And if we try to change any information in the block number 1, what's going to happen? The whole chain has to change. And imagine miners spent so much time and resources in order to build this block. What the hacker has to do? The hacker will come in and try to change the transaction. First of all, the hacker needs to know your private key in order to change anything in your transaction. But if hacker records, let's say they record the new transaction, hacker needs to do the miner job and rebuild the first block, but after that, because the hash of the first block is changed, he needs to rebuild the second, the third, and so on. And it's millions and millions of blocks. So that's why it's impossible to hack a blockchain. And it's never been hacked so far. And every time a new block gets created, a new cryptocurrency gets produced. How about that? For Bitcoin, cryptocurrency, the supply is limited because it has the built-in rule that the reward is halved every 200,000 blocks. Every 200,000 blocks, reward is halved. So for example, at the very beginning, a Bitcoin reward for the block was 50 Bitcoins. After that, it's 25. Now it's 12.5. And so on. It will be halved and halved and halved until the whole supply is with 21 million Bitcoin will be released. So this is the rule. And imagine, so this is a cryptocurrency without an inflation. This is only one example of the blockchain. There are other blockchains where supplies are not limited. But this one is limited. Now, remember all these puzzles that miner has to solve. This is something to do with the consensus. And what is the consensus? This is the algorithm based on which is decided which miner gets the reward. And we talked about, when calculating the nonce, we talked about proof of work. It means that miner has to show that he invested lots of work, lots of time, lots of resources into building a block. Whoever investing lots of time, lots of resources.
I am sorry. I'm just going to watch the movie. Thank you so much. I'm so sorry.
You're not going to be on TV. So whoever invests lots of time, lots of resources into building a block, very unlikely going to cheat. Because, again, it's only just a chance to win. Okay? So now, imagine all these resources, all this power are getting put towards building a block. And right now, with the proof of work, lots of electricity get kind of wasted. So we all heard that lots of electricity got wasted on producing a Bitcoin, for example. But there are other ways. There are other algorithms. Some of them we know only in theory. As an example, the other one is proof of stake. That's the second one. In this case, miner does not have to spend the power, time, and electricity. All miner has to do just to invest funds, cryptocurrency funds. So these funds get put on the account, and then the miners just get this right to build the block on the randomized basis. But this randomized basis is still based on how much cryptocurrency they put aside onto this account. Let's say that I'm a miner and I put 1,000 Bitcoins on my account. And there's another miner who put 2,000 Bitcoin on his account. And we're only two miners in the network. So the miner who put 2,000 Bitcoins on his account gets twice as much chance to build the block. But if this miner cheats, his 2,000 Bitcoin will get burned. He will never see it again. That's how proof of stake works. And we know that blockchain that implementing right now proof of stake is the Ethereum. So Ethereum is going from proof of work, which is energy wasting, into a proof of stake right now. There are other algorithms, for example, proof of burn. And this one, I honestly don't know any blockchain that uses it, but it exists in the theory. Maybe you can build your blockchain and you can use it. So it's very similar to proof of stake. Proof of burn, it's when the miner puts aside onto account some money, but after it gets a chance to build the block, this money gets burned. This is how proof of burn works. Some blockchains also have a hybrid consensus algorithm, which is combinations, for example, of proof of stake and proof of work. You are welcome to come up with your own algorithm, as long as it's secure and as long as it's fair. And that's what consensus is all about. Moving on to transaction fees. Same as a gas, known as a gas. How much money do you pay for the wire transfer? Something like that. So the blockchain and the cryptocurrencies, they also have a transaction fees. Who does $35 go to? The bank. So we pay for their services. In the case of gas, this money, they do go to miners. So miners get all the rewards plus the transaction fees. But they are not put there for the greedy purpose. They are put there, the fees are there as a denial of service attack protection. For example, if I'm a spammer, nothing stops me to make lots of transactions if it's free, for the fun of it, just to spam the network. So in order to protect from the network from the spammers, the transaction fees are put in place, and only for this one. Okay, let's go into the boring history, blockchain history. So Bitcoin was the very first blockchain that was brought to life in 2009 by Satoshi Nakamoto. And here I have a picture of him. Well, of course, it's a joke, because we don't know who Satoshi Nakamoto is. There's lots of rumors surrounding him that this person or this is a group of people, and his identity was never revealed so far, and not sure if it will be ever revealed. He is not an owner of the blockchain, but for sure he was the first user and first miner, he or the group of people, or it might be even a she, we don't know. But his invention right now, alive for quite a few years now, and it's growing in price, as we know. What was the meaning of this? So the meaning is to replace a bank, to remove the bank out of the equation, to implement a payment system, a peer-to-peer payment system, so people could transfer money to each other and not through the bank. And that's why all these complicated rules were put in place. So the system can protect itself. It cannot be breakable, it cannot be destroyable, and it can be reliable. And I think the intent was it should be cheap. But as we now know, maybe it's not going to be. Another blockchain that I want to mention, it's Ethereum. And that was created as a smart contract and decentralized application platform. And it was brought to life in 2015 by Vitalik Buterin. And here's his picture. And actually, we have a mom in this studio right now, his mom. So the Ethereum was created in order to remove any third party from the transaction. Let's say that on a daily basis, we deal with each other, and this is, small dealing can be represented as a transactions. For example, I signed a will, for example, or something like that. And I signed a will so my kids could have my Bitcoin after I die. So right now I need to go to the lawyer in order to do that. But lawyer could be programmed and replaced with a smart contract. Smart contract that looks like this. This is just a piece of code. So basically, the lawyer or other third party can be programmed as a code. And in this case, this lawyer or whoever third party is will be not beggable, not breakable, not cheating, nothing. It's just a code. An idea was to remove this third party out of the equation. Same as we remove the bank out of the equation, we can remove, for example, a lawyer. Is there any lawyers here? Or let's say the escrow service, right? So when you sell some valuable item to somebody, and you have the company who takes the escrow and handles your money and handles the dispute. Basically, it can be programmed, and you can deal with each other without the escrow system using a smart contract. So, and also, the application of Ethereum is not only a smart contract, but it's also a world computer. So there are, on its base, many applications can be created, and it will be running on people's computers, like on thousands and thousands of nodes all over the place. That's decentralized application, which allow people to deal with each other, not through the party. But these applications will remove the third party from the equation. These are usually questions I'm getting asked on my presentations. So, who owns the blockchain? Is it a big blockchain boss or the blockchain corporation? Can you answer that question? No one, yes, or everyone. Because it's on people's computers, fully democratic. Lots of power, lots of responsibility. So why blockchain owners are so greedy they collect transaction fees? Yes, that's protecting from the spam. Yes, that's correct. Thank you very much. What is blockchain customer service phone number? Thank you. That's correct. No. Yes, and this is, of course, this is a big power, but as well, if you lost your private key or something like that, there is no customer service. There's nobody to call you. It's a big inconvenience. But that's the way it is. I send my money to the wrong address. How do I get them back? You don't. Yeah, that's right. And because we talked about that, you know the address of the person that you sent to, but you don't know any other credentials or anything like that. So you cannot message this person or do anything, right? Yes. This person could be, person could be honest and send you back his money if if you receive it by mistake. I would, but I don't know. Anybody had this experience sending money to the wrong address? Yes. I had just recently a lady that I knew for like 10 years. She called me and said, "Oh, I know that you right now you're doing a cryptocurrency workshops. Can you help me? Because I invested into Bitcoin in 2015." I said, "Wow, 2015? That's great. That was a great decision." It's like, yeah, I don't know. I invested through some broker company. And they gave me the certificate, and now their website is down, and I don't know what to do. That was a very sad story. Yeah, she invested $500 back then. She would be a millionaire right now, yes, but unfortunately.
In 2015, Bitcoin was only $200. She would have got 2.5 Bitcoins, or she would have had $45,000.
Okay. Still.
She would have been okay. Yeah.
She would be, yes. Thank you so much. It sounded much better in my head to have a millionaire.
In 2011, but she would have lost her money 5 times. So if anybody can lose all their money 5 times, go from 100,000.
That's correct.
Then you deserve the $1 million. So
Yes.
people that have been holding since before 2012 that those $1 million stats apply.
Did anybody in the studio lost $1 million so far?
I lost over $100,000.
200,000? Wow. Yes, I know, yes. Investment game is very tricky, yes. And that's why on our workshops, we don't give any investment advice. We just give you advice to protect your private key. So if you choose to invest, at least invest it right. So don't invest it through some broker that you don't know, even though they give you a certificate. If you don't have your private key, you don't have your money. All right, so and that's my last question. I lost my private key. Who should I contact for help? Yeah, yeah, call me. No, that's. I have another story. We were in a hackathon about a year ago, and a lady was coming in, and she said that she had her password. Actually, she had her password typed and recorded on the paper, right, and to her Ethereum account, and she now entering her password, and it's wrong. Anyway, so she was asking Vitalik to help her to get the money, because at that point she had millions of dollars. Yeah, and I found recently that actually there was some guys who were able to help her. And her issue was just in encoding of the quotes. So her password just contained the quotes in the password. So there was a different encoding. Different quotes that she was putting in. She was able to open her account. And she had like 40 or 30 million, something like that. So that's, yeah. Yeah, and this person got 25%. So this is a happy story, I think, because she was really happy. And that person who actually resolved the puzzle for her was really happy too. So this is a happy ending. All right, going into review. So what is a blockchain? The blockchain is a decentralized database that's located on 1,000 and 1,000 computers that's spread out all over the world. And inside, it looks like a chain. In a nutshell, it's a common asset ledger that looks like a chain. That is protected by cryptography. And cryptography level 1 is signing all transactions with a private key. And protection number 2 is a miner. So miner solves the riddle in order to calculate a hash. And this riddle is not easy. That's how it protects the blockchain. And I will tell you a little about our company that are doing this workshop for you today. So our mission is improve a gender balance. And I think today we are succeeded in here. There's lots of girls, and I'm so glad to see it, because on every event that I go, I don't see that many girly faces. And yes, and we're building our company to become a global hub for female talent. So we do now events, and we do now educational events towards bringing into the space more women and educating them in all aspects of the blockchain. And we also want to create an opportunities for them and connect them to potential employers. So that's what we do. Here's our team, and all of them are in the studio today. So you can later say hi. They're all wearing the t-shirts. And this is what we do. We do educational programs that cater for women and also for kids. And we do conferences and events, and we speak on the conferences and events, so we put in ourselves a lot out there. And also we do in the studies. So we're researching, for example, right now we're doing a study of all the real-life blockchain projects that are in there and what problem they encounter, so the other people can use this experience, the others' experience. And I think this is very useful. And we also connect our ladies to employers. Our big event is coming up on April 6th, and that will be CryptoChicks Blockchain Hackathon and Conference. So we will be featuring a world's first female-only blockchain hackathon. So if you know any girls who would be interested in learning a blockchain, because one of our sponsors is providing a completely free blockchain education. So will be a courses online. So Blog Geeks is our sponsor. So they will be opening up for all our participants free education, free online courses, plus they will be putting up webinars with a coach. Plus, we will also provide mentorships on the event itself. So there will be mentors mentoring the teams. And we'll have a cryptocurrency and cash prizes, hopefully. And at the same time, we will be running a blockchain conference with female speakers and panelists. So we want to have only female speakers and panelists. So we are inviting blockchain ladies who has their own companies, who are doing real projects into Toronto, and they will be speaking about their projects. So we have already a few speakers confirmed, and we also will be running the workshops for developers. Thank you very much. Now the questions.
So we're going to do questions now, right?
Yes.
So I'm going to walk around with this mic, and I'm going to give one to Dee as well. So if anybody has a question, just so we can get you on the video, not your face, but your questions. Who's got any? Here you go.
Hi. Thank you very much for that. I had a question about the miners. You said, I just wanted to clarify about the mining. So that happens, it's a competition, so the miners are doing it at the same time? Is
That's
that correct?
correct. That's
and
correct.
how is it released to them? Is it released by Bitcoin? Like the blockchain?
Yes, because there is a rules that are programmed in the blockchain, and yes, whoever comes up with this riddle, with the solution of the riddle first, and whoever actually broadcasts it first, and that person gets the reward.
And
Sometimes two people come in first, and they get rewarded too, but with a lower ratio.
Oh, so it's
Yeah.
split between the two if it's the same time.
It's not split, so
Oh.
the second person gets rewarded, I think, just some nominal money. I don't remember, like 5 Bitcoins. I don't remember how
I
much,
see.
but yes.
And what's the typical time for a blockchain to get solved? between miners?
One block?
Yeah.
Recently, when I checked, it was about 10 minutes, 10 to 12 minutes.
Okay. Great. Thank you.
Yeah, just a question regarding the exchanges. I'm still fairly new at trading, and I know technically you're not supposed to keep large quantities on the exchanges.
That's correct.
Nobody's perfect. I have some on there. But keeping it on there, does that preclude you from obtaining the dividends? Like I have some tokens that pay a dividend. Do you lose the dividend by keeping it on there? And then also I found some exchanges are much easier to work with than others. So is there any exchanges that you particularly think are the best exchanges to use as far as liquidity and transactions and
Yeah, this is a very good question. It's changing all the time because the exchanges are the businesses, right? And they have to play by the rules. They are regulated by the companies of their jurisdiction. And also they are, so right now especially with the lots of interest to the crypto, they are under pressure. That's lots of people actually want to register and buy. And I recently ran into actually some people who cannot register on any of the exchanges except, for example, Quadriga, and they don't accept wire transfer. So the people are put in a situation they cannot even buy cryptocurrency. Like they even can pay higher price, but they cannot buy cryptocurrency. So you say to recommend any of the exchanges. My personal choice, I use Kraken, for example, because there's lots of coins that you buy in there, but only for that reason. For convenience, you have to do your own study, and we have our workshop on the exchanges. We don't recommend, we just tell people what the exchanges are, and depending on your situation, you use them. For example, if you're interested in dividends, then yes. But at the same time, when you're keeping money on the exchange, you have to take into consideration that there are forks, for example. And Bitcoin had recently 2 forks, and people who held their money on exchange, for example, on a Kraken, which I did not receive any Bitcoin gold. Right? So other people who kept it in their wallet, they did, and I did not. So that's something that to keep in mind. And also, yes, to keep in mind that exchanges can be regulated, they can be closed, and they can change their rules. For example, Kraken changed recently their rules that you cannot withdraw more than a certain amount of cryptocurrency. Before that was not regulated like this. And so you have to check, and not only you check once, but you have to keep checking back because the rules are constantly changing for the exchanges.
So do you know if you do hold it on the exchange, you do not make the dividend, or does it depend on the exchange?
It depends on the exchange. Actually, first time I hear that. Which exchange are you referring to? That's
Binance.
Sorry?
Binance?
Okay, yeah. No, I don't know this one. Kraken, for example, they don't pay any dividends, and so probably they doing a really good business if they pay the dividends. But holding money there, you of course agreeing to certain risks. Depending how much dividends also you get. So the cryptocurrency growing so much, and if you lose all of it that you hold on exchange, is it worth the risk? So that needs to be taken into consideration. Next. Sorry.
Okay, we're just finding some more people to ask some questions. Do you have somebody over there, Dee? We got some people over here. Okay, yeah, you go ahead first, and then we'll get these guys.
Hello. So my questions are like pretty trivial in a sense where a lot of the people around me, like I'm really new to sort of blockchain, and a lot of people around me actually don't really know the difference between blockchain and cryptocurrency. And I guess my question to you, like, what are the fundamental differences between the different type of cryptocurrencies? And my other question is that is there sort of like differences with, mining the different type of cryptocurrency? Like, is there different like algorithm that they have to solve? Like, that's kind of like my kind of 2 main questions for now. Thank you.
Yeah. Yes, the all different. They have same fundamentals that we explained here, but there are different flavors of them. And yes, here I explained a little bit about Bitcoin and Ethereum, and you saw the difference between them. So there are other ones, and you can read their white papers. It's very beneficial to go because behind each blockchain, by the way, is a technology, and cryptocurrency, this is a digital asset, so you have to understand the difference between it, right? So hopefully I explained it a little bit better. Anyway, so you have to go to the website. For example, Bitcoin has their own website, Ethereum has their own website, and I said their own, it's not the company, it's actually developers who are developing the code. So the blockchain itself, it's on the people's computers, but you download it from their website, and they are responsible for the updating it. But they of course, they program it the way that it works for everybody and does not die, and people still use it, right? But again, so you have to go to the website and read their white paper, that's what it calls. So once you read,
So does this mean that, like, so let's say, like, blockchain, they will have their own, Bitcoin, they'll have their own set of codes. And then for Ethereum, they'll have their own set of codes.
That's
and then
correct.
in terms of to mine these cryptocurrencies, basically, they will just have to have their own codes. And okay.
that's correct.
Perfect,
They
thank
all
you.
have their own codes. Yes,
Okay,
yes.
thank you.
It's publicly available on the GitHub, so you can actually look at their code. You can see what they're doing. But yes, they will have all different codes, and they use a different encryption algorithm. But the cryptography is different as well.
Hi. So I have two questions for Ethereum. So the first one is you said Ethereum differs because they use a proof of stake.
Proof of stake, yes.
Right. So in terms of, I guess, making a transaction, how much is a transaction? Does that differ from any other like platforms as well?
How much you mean, like the gas or?
Yeah, the gas.
Yeah, it's all also defined within the rules. So
Okay.
and it's also changes. So there is the limit of the transaction. It's all depend also on how busy network is yeah. So in the proof of stake, how it works in the current state, they are right now switching from proof of work to proof of stake. So there's most of the blocks are building using a proof of work, and some of them starting to build as a proof of stake. So that will
Okay,
they'll
so
be
they're
gradual.
transitioning.
The gradual, yes, and as difficulty increases, the proof of work will not be as beneficial for miners anymore, and they will be incentivized to move towards proof of stake. So that they will not make that much money already with
Right.
the proof of work, and that's how it will be shifting. So for the end users, it will be seamless. So for you, for example, when you use Ethereum, it will not make a difference either on a proof of work or proof of stake. The only thing, my personal opinion, that it will be faster because it will not be wasted that much energy and that much time to build the block. So the performance will improve. But for the end user, it will not make a difference, whether it's proof of work or proof of stake. And it will be as well protected as was with the proof of work.
So my second question is it fair to understand that, for example, creating a smart contract is like working on an open source platform where, for example, we're building people want to trade carbon, for example, or trading anything. So they create the smart contracts on Ethereum. So how does that work?
So when you create your smart contract, you deploy it, you upload it kind of like in a network through your wallet, actually. And the code that you upload, everybody can see that.
Okay.
So everybody can see your smart contract and the code, and that's why it's very important for the smart contract developers to audit their code and to be really good, because imagine the hackers, they also see the code, and they
Okay.
can find the loopholes and everything. So
Okay.
that's why it's a big responsibility to build a smart contract, because the code is open. And remember, this database is on the people's computers, so everybody has access to it. So everybody can see it. It's fully transparent. So all the information is fully transparent, including the smart contracts.
Okay, thank you.
I have a question too. Hi. So when basically we look in the stocks, we could, between any fluctuation of stocks, we could say there's some economical or political mechanism that works, and we could justify this change in the price in the stock. Versus Bitcoin today went down with almost 10,000, right? So almost 50% drop. So what do you think behind, what is the mechanism stays behind such a huge fluctuation in the currency?
If you can imagine all money in the world that invested in stocks, it will be like this. And invested in the cryptocurrency, it will be like that. So it means that every trade that we do, like for example, I do the trade, it affects the stock already much better, much more visual, as opposed to the stock market that are huge. It means that more money will be in cryptocurrency in the future, like invested, so less fluctuation we will see.
So what do you
Right.
say in capitalization of Bitcoin right now? It's like very small. Like I had a pretty good idea. It's a lot of money put in Bitcoins right now, no?
Yes, it's pretty small relatively. If you're comparing it to stocks, yes, of course it's small. Yeah, the cryptocurrency. If you ask any people on the street, they don't know about Bitcoin, but they know about stocks. So you can see the level of
So
the
what
knowledge.
are you trying to say? Today, a lot of people just sold Ethereum and Bitcoin, or
Yes,
a lot of people
that's
did-
what's
did
happening,
transactions
yes.
today, but the transaction has to be drawn. Like if I having like 10 Bitcoins, something has to make me to sell it today, right? So it has to be some reasons behind my decision to sell. So I'm asking, do you know what reasons behind? Is it political reasons? Is it there's something that comes in the news? What's driven by this such a big fluctuation? What has a reason for this fluctuation?
It's a speculative. Yeah, I know that today the whole market went down, and there's lots of speculation.
But Bitcoin famous for its fluctuation, right? So it's going it goes in a cycle up and down. So sometimes not coincidental with other markets, stock markets. So that's what I'm asking. So what is the reason? Is it the political reason? Is it the economical reason?
I
so
would
any way to predict this fluctuation in the price? That's my question.
So, I wish I could. Yeah, I wish anybody could. Yes, I think it's a combination that affects the political and people here they sell, people here they buy, right? So that's the people opinion, and I often ask the question, what is the value? Like, what's the value of the Bitcoin? Like, where is the value and how is it? This is just the people's interest, you know. This is just opinions, just the interest. If I'm interested, I'm buying the Bitcoin goes in price, and that's what is driving the market as well. So nothing else. Yes, and unfortunately, no, we cannot predict because there's lots of factors, and this is because it's also based on the opinion of different people. Nothing we can predict. Of course, when the big players will come into play, because the funds right now are getting really interested in investing into cryptocurrency. So when these big players come on the market, maybe it will be more predictable. But right now, no, we can't predict it. Yeah.
Guys know exactly, not exactly, but they've been pretty accurate. So it's like
In predictions?
But everything dropped today. Every cryptocurrency dropped.
they are
All of them because of the news, not because of something like stocks, for example, or something, right? Because of the news.
But now we know that everything will go up very soon. This is a great prediction, I think. Yeah. Yeah.
Okay. Guy, we're gonna break up in a few minutes, and we can all just socialize and talk. And I think this guy over here knows exactly why it's coming down. Maybe not. But
That's
he's got
incorrect.
something to say.
No, I just wanted to know if you can clarify off the tangent. When you were answering the question, you mentioned that if I had Bitcoin in a wallet and then it forked, I would have gotten Bitcoin Cash.
That's correct.
That's correct?
Yes, if you get Bitcoin on the wallet, it means you get it on the blockchain in your wallet. Yes, if a fork occurs, and what the fork is the changing of the code. So when the half of the miners, let's say, go to the new network and half stays on the old one, and you will have a cryptocurrency in both. So if you had 100 Bitcoins in one network, then you will have 100 Bitcoins in another one as well. So your money kind of doubled. Right? So if you don't have this in your wallet and you have it on exchange, how exchange is holding it? They actually holding it in the wallet, and they will get you 100 new Bitcoins as well. They just don't give it to you. Not all of them, like some of them will, but not all of them. Yes, but if you have it in your wallet and fork occurs, then you will get it for sure. Sorry? Same thing. Same thing. Cold wallet is the same thing, I'm repeating.
Okay, anybody else over on this side have anything to say or ask?
Can you explain the relationship of wallets with, is it account numbers and addresses and private keys?
And private keys? Yes. Okay, so wallet is the program. This is just a program that you're running that allows you to communicate with the blockchain. So there are different wallets and different mechanisms for the different blockchains. Some of the wallets, most of the wallets, they can create many accounts for you. So in your wallet, you can hold many of them, many accounts. And did you see the account number on the slide? Let me go back, and I will just go back to that slide.
Is each transaction have a different account number?
Transaction is transferring money from one account number to another account number. So that's what transaction is. If you're transferring money from one account to another one, and then in a day you transfer from the same account to the same account, so you will have your account numbers will be the same in these transactions. So your address, right? So and you have a private key. So basically, when you have your private key, you can calculate your address, but not vice versa. Okay, so that's how it works. So this is cryptography. So your address and your private key are bound by the cryptography rules. So from your private key, you can calculate your address, but not backwards. And people say that with the quantum computers, sometime it will get this relationship can be broken. I cannot speak for all blockchains, but for some blockchains it will be. Yes, and yeah. So your wallet can have multiple addresses. Your account will have only one private key, and you can use your account having only private key.
By account, do you mean address?
Address, yes, address.
Thank you.
So here we go.
You mentioned that once you release the 21 million bitcoins, that there's no more bitcoin there new
That's
to be
correct.
created. Then who's going to be incented to manage the blockchain network after that?
Yeah, I've get this question a lot. So the fees, the transaction fees, still will be there. So the miners will be running out of the transaction fees only.
2,140, and the last 7% is going to be 100 years to release. So you're going to have all the bitcoins out by 2040. It's going to take 100 years to release the last 7%. So 2,140 will be the last mining. So if Bitcoin's still around by then, I'm pretty sure everything will figure itself out.
Itself out. Yeah, and remember also that developers are still working on a Bitcoin, right? So it might change as well. Yeah. So right now, how the way it's programmed right now, the way it's working right now, yes, that's correct. So the 21 million Bitcoins will be released, and that's it. Miners will supposedly be running incentivized only by the transaction fees. Yes, but it might change.
Everything might be free by then.
Yes.
So we won't
Or
need-
we will have, the asteroid falling onto the Earth.
Oh, yeah. Okay, any other comments, questions over here or over there? Okay. Okay. Let's make this the last one, then we can just enjoy some high-quality snacks and get to know one another.
Percentage-wise, where's the percentage of people worldwide within the space? Is it like 40% North America and 20% Europe, or what?
I don't have this information, unfortunately, and it's also changing. But I don't know whether we can find out it somewhere online. But no. So the percentage of the people who owns the nodes, right? Like the blockchain nodes, for example, in Europe and Asia, and yeah. So we don't have this information.
The only one I know is that the total exchange, U.S. dollars. The only information I have is on fiat, which is like value of regular currency to crypto. So it's only 20% in U.S. dollars. So we are not the main players. The main players is Asia. And that's the reason the markets fell today, because they're closing down the exchanges there.
And I also heard the rumors that they are cashing out their money to buy the gifts for the Chinese New Year.
Okay, so if that's it, then we'll just break. Do you have any final thoughts or words, Elena?
Sure. Thank you so much coming today for the presentation. Yes, and I'm looking forward to see you on our further events. Thank you.
Please help yourself.